How you doing?
Doing good. Good.
I thought great. I have no idea who you are. So tell me who you are and let me see if I can find you real quick on Twitter.
I don't do Twitter. So
you don't do Twitter.
I am not a social media fan. I do LinkedIn, but I am not a social media fan.
Okay. Well, tell us a little bit about yourself. What do you focus on? What do you do in the markets?
Okay, I've been trading since 1987. I've been registered as commodity trading advisor, has Series 3 broker's license, so on, all back in the day.
What a great year to get started.
Wasn't it? Yeah, I was literally about 3 months before the crash. And I just remember sitting there that day going, what the hell have I gotten into?
Right. Okay.
Anyway, I was self-taught trader about 5 years before I really could, feel like, okay, I think I can make a living at this. And I started out doing swing trades, trading commodity futures. That's my specialty. I really don't trade Forex. I trade Forex futures, but I don't do the Forex market itself.
Sure.
I always had issues with Forex with the regulation, and it was never regulated, and I'm a type person, I'm all about regulations. So what kind of kept me away from it for so many years. And also it really didn't become what Forex wasn't traded by the public until late 90s or something like that.
2001. In the US anyway. Yeah. Right. In the US, right. we had the ability to start trading. That's why I started trading currencies, is because it was fresh and it was new in the United States. So yeah. So you're commodities dude.
Yeah, I am. I do I don't day trade. I only do swing trades, and I do commodity spreads. That's another style of trade. And for example, I might be long, a new crop and an old crop of a grain of some type, corn or soybeans or something like that. Energy markets, I could be long, certain times of the year. You come in, you get, like, for example, Memorial Day, around January, you want to get long some May crude oil and short December, and that's usually a pretty good spread. So that's the kind of trading I do. It's longer term.
Got it. And by the way, did you want to show your charts, or you can take them. I can pull up things for you as we're going through them. Yep. It's up to you.
I was going to talk. I also, something I've been doing recently. I taught classes for about 15 years on the futures market of teaching people to trade and stuff like that. I resigned from that about 2 years ago. And now what I do is just I trade, but I do articles. I write articles for Barchartcom and do some futures market analyst work for different podcasts and stuff like that. So I just wrote an article this weekend I was going to talk about with the dollar for the fourth quarter coming up.
Love to talk about it. Let's talk about it. And by the way, I was just looking at the CFTC data on Barchart.com, and I was just noticing that finally the euro longs are they haven't gotten to the institutional, or excuse me, the non-institutional large speculators have finally started, I want to say, capitulating. They're almost back to break even here as far as their positioning goes. But I was just looking at that before you came on here, ironically. So what do you make of the dollar, and what have you been writing about it?
Okay, well, I just wrote this weekend. Matter of fact, I'll just do a screen share here, and I'll take you out to bar chart and show you the article, and then we can just kind of go from there.
Yeah, sure. Go ahead. Take the screen.
Screen here, and there we go. And I don't see the green around my. Try something else on this share. Wrong one. Can you see the bar chart on your screen for me?
I can see bar chart premiere. So you look like you're going to search for a symbol.
Yeah, that was it exactly. So normally I have a green bar around this. That's why I was questioning it. Okay, so basically this is the bar chart website right here. And I just wanted to, if any of your listeners wanted to follow articles that I write, they can do that. And I'm just going to show them the process of doing that later on. But anyway, it's once you get to barchart.com, right up here, there's a place where it says news right in here. And you'll just click on that. And then over here on the left, it just says, featured article or authors right here. And then there's my name down here, just Don Dawson right here.
Oh, great. Okay.
And once you click on that, it'll list all the different articles. I don't know what's going. Oh, here we go. It'll go all the way back to 2 years worth of my articles I've written for them. I usually do a weekly articles for them. But this is the one I just did this weekend. I just wrote this one on the yield curve last week about, okay, so the yield curve is inverted, but when does the actually recession, when does that start? And it's a pretty good article. Well, I don't like to brag like that, but I'm just saying it's an article about a chart where you can, where the Federal Reserve called Fred, you can look at that, and it's a really interesting concept. Let me show you that really quick because it kind of ties into this article that we're going to do. Anyway, here it is. And this is the Fred chart right here. Now, I know this is only a handful of the gray boxes are the recent recessions that we have had. And then this is the inverted yield curve. Now, the yield curve I like to follow because there's so many different yield curve inversions. You hear people talking about the 2s and the 10s, the 5s and the 10s, and so on like that. This one is the one I keep on my charts from ever since the 80s. I have kept these on my charts because this has been the most reliable recession indicator that I can get. And also the Federal Reserve has written papers on this, that this is a particular spread that they, or yield curve that they like to watch. What's happened is you've heard in the past where people, will have like a 2 and a 10 will go inverted, or a 5 and a 10 will go inverted, but this 3-month Treasury bill and the 10-year Treasury doesn't go inverted. And then that's where the old saying comes out that not all inverted yield curves turn into a recession. And I agree 100% with that. But when this 10-year and the 3-month inverts, it's like a 99.9% we are getting a recession. Okay. This is like the last of the Mohicans that are going to get, it's going to go inverted. So if this one goes, it goes that deep of an inversion, we get the recession. Now, what this chart is showing you here is this gray area are the previous recessions that we had. This little dot dash right here for a recession was back during COVID. This was the shortest recession we ever had in history. And why? Because the government started coming in with all that helicopter money, giving money away, right? So the recession lasted like almost overnight and it was gone. But what I want to point out here is when the 10-year yields are yielding more than the 3-month, which is how a normal yield curve would be, these lines are staying above the 0 line. However, when it dips down, when the line dips below this, what that means is shorter term maturities like Treasury bills, 3-month, are yielding more than 10-year Treasuries. Okay, which if you think about that from an investor standpoint, who wants to buy a 10-year for less yield when they can buy a 3-month for a larger yield? So that's what's an inverted yield curve. But what's interesting is, there's usually no saying about recessions start 12 to 18 months. Once it gets underneath it here, it's 12 to 18 months forward is when the next recession starts. But a more reliable indicator is this. Notice the pattern here, and this happens every stinking recession. We go inverted and we can stay under there for different periods. Look at the one we're in right now, how long we're under it. And the durations are never the same. It's never 12 months or it's never 13 months or 18. It's all over the place.
Well, it would be nice if they were the same every time, right?
Exactly, wouldn't it?
You're wonderful.
But what's interesting here is notice when these gray boxes appear, what has happened is the yield curve is no longer inverted, has gone back to a normal yield curve. Notice that?
Yeah. Uninverting.
Yeah, they're going back to what they call a normal market. Exactly. So look what we're seeing. This is one of the deepest inversions we've had historically, but that's because of how much money was pumped into the economy, right? So anyway, this is the trend that we're in right now because the 10-year yields have been going through the roof lately. And if you look at 3 months, they've pretty much just been going sideways. So now the trend is starting to go back up towards this. So I'm actually looking for like somewhere around the end of the first quarter of 24. I think that's when we're going to start seeing the recession's really going to come in and start feeling the pain. And we're going to, now remember, no one knows when we're in a recession until we're almost coming out of it, right? Because I do all these different calculations and, 2 negative GDP or 2 quarters of GDP and so on like that. But at some point they come up with some date and say that's when we started. But rarely do you ever hear anybody talking about we just started a recession today. It's always about, okay, it happened a couple of months ago. But anyway, the point is, once this comes up here and goes across this, that's when the next recession will start. And it's not kind of maybe, and we can all do, it's different this time. But how do you argue with this? As traders, we're pattern recognition people. When we see a pattern happening over and over and over, we shouldn't go against it, right? It's it's kind of like going up and shaking hand with somebody. And if they punch you in the face 5 times after they shake your hand, what are they going to do the 6th time? You know what I mean? It's the same concept. So why do people fight these patterns? I'll never know, because everyone wants to be like they got, so much of this college education, I guess you want to call it, or over education.
So they're going to outsmart the market.
Exactly. And no one's smarter than the market. The market is the king, right? Well, next to your wife, that's the first boss. The market is the biggest boss.
You met my wife. You met my wife. All right, cool.
I did, but I learned that is the smartest person in the world. But anyway, I just wanted to kind of point that out. But this is definitely, that's when these recessions are going to start. And that's what this article is all about right here. Just go into all that kind of stuff there. So since I wrote or taught for about 15 years, most of my articles have got content in there about, events coming up in the markets, but it's more about education as well. I try to give some education in there as well as, events that are coming up. As you can see, I do a lot of seasonality. That's probably the majority of my work when it comes to commodity trading. But it's interesting because seasonality goes into financial markets as well, which we can talk about that here in just a second. But soybeans, obviously, really good seasonal patterns. Australian dollars, they've got some pretty good seasonal patterns because why? Their country is so dominated by commodities, right? So anyway, pretty interesting stuff when you tie in seasonality. And just like you were talking about the commitment of traders and so on like that. And for me, just technical analysis after that. I'm a big trend follower. I don't try and fade trends. So I try and go with trends that are in alignment with seasonal patterns. And like you were just looking at the commitment of traders, I try and get in sync with those managed money. And because when they start put positions on, they got to stay on it for a long time. Technically, they're trend followers too. So I like to get in sync with all three of those, and then I got usually a pretty good trade setting up.
Interesting. So tell us a little bit about your feelings on the dollar right now. I mean, we're in a really obviously unique situation. This weekend didn't help anything from people that are trying to fade this dollar strength. It is obviously very strong. Do you think the dollar strength is going to continue here?
I do. Yeah. I'll get that here in a second. Anyway, as we go through this article here, if you decide, you want to sort of follow me or whatever, up here in the right-hand corner, it's all free and you don't have to sign up or anything like that, but just follow the author. Every time I write an article, which is weekly, you'll just get an email link and then, you can go check out the article.
Great.
So anyway, right here's fourth quarter dollar strength and how to place your bets, basically. So when I just wrote over this weekend, here we go. So there's some seasonal factors that come into play, which is, part of this. And I'm just playing again on patterns. And this is the US dollar seasonal pattern right here from January back to here. And this is more research. That's where I get my data from. And you can see for the last 15 years, that's what this black line represents. But this is coming into the fourth quarter right here. And notice it's like one of the strongest, percentage-wise moves we have throughout the year. So right here. So this is the one that I'm kind of interested in playing for this year. So just to sort of put a little disclosure or disclaimer out here first, anytime there's a seasonal pattern, they're never perfect, okay? So this is why we go back and we tie in technical analysis 1, uptrend, because we got to buy. I want to come in and look again. The commitment of traders report can give you a little bit like you want to see. I'm going to use the euro as the proxy on this thing, but you want to just kind of go, what's going on in the euro market? Because the dollar index, as far as futures go, has so little volume in it. I don't think, in my opinion, it's not worth trading when you got something like the euro futures or even the euro forex with so much liquidity in it. Why not just use it? So this is kind of what's got me excited about this. And then what I went into down here is about what starts all of this seasonality up here. Like, what are some of the seasonal factors? And for up in here, some of the stuff is, you can see there's some businesses right here. You get holiday season coming into the end of our year end or whatever. So all those imports that are coming in, well, then consumers go out and then they start purchasing all of these imports that came in, putting some strong dollar demand out there as well. There's also corporations that do sort of repatriation of capital, and some of that comes back into the country based off of year-end taxes, financial reporting purposes, whatever it might be. But that goes on at the end of a year as well. Obviously, we got market sentiment, which is going on right now. When you get an event like what happened overseas this weekend, that type of a stuff is going to put a little bit of a, okay, I don't see that ending between now and the end of this year. To tell you the truth, I think that conflict is going to go on a little longer, which is going to, I think, keep a bid in the dollar. Again, I'm just adding, my own opinion on something like that, but I just think that's what happened last night. We seem to have gotten quite a good of a bid there in the dollar. So anyway, we'll see what happens with that. Interest rates. Okay. with the news that came out last week, I'll get down to here on that. If interest rates are still creeping up, that's still bullish for the dollar as well. And then just last week, okay, so economic data, obviously that impacts it. But when you look at things right here, like we just had that economic unemployment number came out Friday, and boy, what a surprise that was, right? 336,000. And then he revised the August up to 227. So when you see that, I mean, that just says that gave the Fed, I think, another green light. They can go ahead and raise interest rates that extra quarter point between now and, because they got the October meeting coming up. Is it December's the next one? Something like that.
In November, yeah.
November. Oh, I'm sorry. Yeah. And anyway, with those, one of those, we're going to see that quarter point raise, no doubt. So again, that's just going to keep a little bit more bid in the dollar as well, I believe. So those are kind of the things right there that I think are going to really add to some of the seasonal pattern in here. And then down here, I just used, again, after writing about that, okay, so we got to strengthen the dollar, but here's the dollar index. And I just like to let people know, I'm surprised how many people don't understand how much weight the euro carries in the dollar index. And basically, you can take a dollar chart and turn it upside down and trade the euro. I mean, in my opinion, that's how close or inverted those two are, or inversely traded. So, but anyway, just the weightings that are going on in that. So if you see that weight that we have in there, and this is how you can use the euro to participate in the US dollar strength, basically. And that's what I was just writing in here. And again, just writing down some of the reasons why you might want to use the euro in place of the dollar. And I think we'd all agree the euro is probably one of the best currency markets to trade from a liquidity standpoint. Plenty of volatility, good trends. The currency markets have actually been showing some good trends this year, which is a refreshing thing because I'm a trend follower and I'd really like to hear that. Anyways, here's a seasonal pattern coming up here on the euro, and we saw the one that was on the dollar up there. And more research is putting this out right here that they're showing that on the fourth quarter right here, that on this particular trade, 14 out of the last 15 years, the euro is closed lower, somewhere in the vicinity of November 12th than on October 20th. 14 out of those 15 years, like a 93% historical occurrence. And then 5 of those last 15 years never had a daily closing drawdown on this particular setup. So when you look at this, and it's going to be about 24 calendar days is the average, plus or minus a few days of how long that's going to last.
That's interesting.
What we have here is a euro daily chart, and then the blue line represents what its 15-year pattern has been. Okay, and you can see, I mean, overall, despite this thing right here, what kind of threw us off a little bit. I'm trying to remember what it was going on back there, but anyway, when we had that situation right there, that kind of threw it off. But the overall bias, you can see, it does tend to follow, except for this little area here, but down, 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 and down. This is the next, just like the dollar, it's got a big move down. The euro does coming into this fourth quarter. And then we get this little pop up right here. So I wrote about that in the article as well, stating that we probably get some kind of a little pop up into here, which I wasn't planning on what happened over the weekend to happen. So you can see we got to start to that little uptrend that we had right here, but I think that's going to be short lived. Anyway, just a little pop up into here, and then a shorting come to here. So depending on how you play, do you trade sell rallies? For me, that's what I like to trade in. I like to sell into resistance in a case like this. Some traders will do breakout trades to the downside. But the key is don't just blindly come in and follow seasonal patterns, because I've tried that back years ago. I've been with them since 2000. And I remember when I first started with them, I thought they were like the holy grail, and you literally could just sell here on that day and buy it on this day. But markets don't go straight to these places. I mean, they'll go up and they'll go down. You've still got to use technical analysis and your risk management, to get into these trades and manage them. So please don't take them blindly. That's probably the worst thing you can ever do. And it also just gives seasonality a bad name, because people come in looking for easy money, and there is no such thing in trading as easy money. So you better off apply your technical analysis and take advantage of some of these big moves like this. And what this window means right here is this is, let's say, shorting window, meaning sell rallies. If that's your style of trading, or sell breakouts during this period. It doesn't mean every day you got to be short, but at least during this period, it should give you a pretty good heads up. This has got a bearish window. I should be looking for selling opportunities. So depending on how long you're holding your trades, I don't think it does much for day traders, but definitely if you're holding positions overnight for, ever a few days to a few weeks, that's something to pay attention to. I use it as a screener. I think that's probably the better way to call it. As I scroll through on Sundays looking for upcoming events and so on, I look and go, what markets might be coming into some good seasonal windows? And I don't always use, just MRCI's data like this. I'll go in and do my own analysis. And one of them is out of the whole year, what month usually makes the lowest low of the year for a particular market, and what months make the highest of the year. And those become significant times of the year. I want to start taking positions in a market as well. So there's different ways you can play seasonal analysis, but it is definitely, for me, a good screener and gives me an opportunity to go, dude, that market deserves some more analysis. So then I go in and apply, technical analysis. I don't do a lot of fundamental analysis, but I do, I look at macro events going on around the world, see what impact that might have on the market that I want to trade.
I think that's great, Don. And I know that seasonals are very intriguing to a lot of traders because it helps them have a directional bias. Like, I'm like, if you're like, well, right now, this time of year, the euro tends to be more bearish, seasonally speaking. This is the chart you're showing us, the chart that suggests that. Yeah, it's like, okay, you got a tailwind, it's like you're not pissing into the wind, you're pissing with the wind, right? So, you got this tailwind working for you. So look to trade into that if you can. So I like
totally agree. Yeah. Why fight the tide? Go look for the easy trades, well, easy is not a very good word in trading either, right? But look for trades that you're not fighting the market, try and go with it.
Exactly. Don, I think that's very, very interesting stuff. And I'm glad I got this opportunity to meet you today. And I'm glad I actually asked around, because I could have easily just said, yeah, hey, Don, if you're here, we'll get rescheduled with Dale. But no, thanks for being here today and sharing with us your work. So the way, so I can clarify this with everybody here, because I'm on the bar chart side. I'm actually on your article as you're speaking. Okay. You just go up to news, you select the author, which would be Don Dawson. In this case, that's you.
Yes.
And that's the best way to follow your work. And you're not on social media.
Yeah, I just do. I'm on LinkedIn, but I don't. I just don't do anything on social media. I'm not a big fan of it, to tell you the truth.
Oh, well, it's ruined the fabric of our society. So
unfortunately, I see a lot of kids that have been ruined by this stuff, but there's some good, I don't want to make it sound like it's all bad. There are some really good stuff out there. And I think Twitter's got some good stuff to it as well, but there's so much fighting and carrying. I don't care for that. So I don't like conflict. I guess is my personality. I just like, just put my opinions out there. You either like it or you don't. That's a nice thing about our country. Everyone's entitled to opinion, right? But it's I just don't like to get into all that, bantering and bickering back and forth about stuff, and Twitter is just full. I think it's just people looking for that. And I think it's that idea they can hide behind some kind of pseudo screen name, and just call you anything they want, or, knock you down as much as they want, because they go like, they don't know who I am. They can't find me. It's like
99% of the time they would never say it to your face.
Right. Exactly.
That's just the way it is. So
I totally agree. Yeah.
Unfortunate. But Don, hey, I want to say thank you so much for spending your time with us. I'm gonna track you down via email, and I'm gonna bring you on the Trader Summit one of these days, and we'll get a little bit more knee deep into some of your chart work. Sound good?
That is great. Okay, cool. And I'm just going to bring up that one thing when we first started talking when about the seasonality there. The financial markets, as I had mentioned, even the stock indexes, your interest rate products, all of those actually have a lot of seasonality to them as well. And part of it is because, like I was talking about, how that repatriation of the dollar at the end of the year by these companies, that's something they just do year after year after year. And as big as these companies are, that's what creates those types of seasonal patterns. In the interest rate markets, there's a seasonal pattern where the Federal Reserve the Internal Revenue Service and so on, they're taking money in from taxpayers at certain times of the year, so they don't have to issue as many bonds during that period of the year. So there's a downward swing in bond prices. It's so amazing how there's these patterns that are in the market, and they get called seasonality, but all they are is cyclical patterns that occur in the financial markets, just like they do in the grain markets, livestock markets, and stuff like that. So seasonality, it's a good thing. If you get a chance to do a little studying on it, I think you'll find it to be to your benefit.
And I really, really, really believe it's so prevalent in some of the markets you cover, especially when you're talking commodities, because commodities, they grow at certain times, and it's just, you have certain weather patterns. Really, really interesting and fascinating stuff, Don. So thank you so much from all of us here at the ForexAnalytix face community. Thank you for spending your time with us. And like I said, I'm going to track you down, and I'm going to have a little bit more dig in a little bit deeper conversations with you in the future.
Okay, well, thank you. I appreciate being on, and sorry for taking so long getting on. I just couldn't find the chat box to type the message in.
So it worked out perfectly. Thanks for being here, and folks, make sure you follow Don on Barchart, and Don, thank you so much for spending your time with us, and everybody, thanks for tuning in today. Sorry Dale was out; he's got a power outage, but he should be back tomorrow, no problem. So you all have a great remainder of your day. For those of us in the ForexAnalytix community, I'll see you in about 15 minutes on the Morning Edge. All right. Thanks, everyone. Hey, traders. This is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.